Hi, I'm Fran Marcou with Marcou Team, powered by RE/MAX Choice Properties. And I have with me here today Jamie Abbott with Prosperity Mortgage, who I've had the pleasure of working with. And Jamie's going to share with us some of the things that are happening out there in the mortgage industry that you might have questions about. Hi, Jamie. How are you and your family doing during all this isolation?
You know, surprisingly, we're doing really well. I have had a couple of moments where I'm like, oh my goodness, I probably need to get out of this house. But you know, my girls are older, Jason. You know, so we're doing okay. We're still going outside and we're still enjoying some things around. But we really have tried to honor, really since the beginning of March, that social distancing and minimum trips and minimum times to the grocery store. I do feel like I have cooked more in the last couple of weeks than I have the last couple of years.
Had some good food,
But
huh?
we're still ordering. We're still picking up stuff from all of our favorite local restaurants.
Oh, that's awesome. You're supporting local. I think that there's many folks that are trying to do that to try to help bridge that gap for our local restaurateurs.
I think we have a great supportive community.
I know. I feel blessed. I really do. Well, tell us what's happening in the mortgage industry, Jamie. I think one of the couple of the hot topics right now is it taking any longer to process a loan? What's happening with the mortgage loans as a whole?
So I think that you're probably going to run in with different companies having different types of timelines. A lot of it has to do because there's a big refinance boom earlier in March, kind of continuing through to now, where quite basically there's just a lot of production in there. But I think that's going to be company for company, because like our timelines have still stayed the same. What we're hopeful for, and probably most other lenders that you ever speak with, is it is a great time to get in and help take care of people. So we're all working longer hours and we're all trying harder, and that goes from the loan officer all the way into production and to try and maintain a sense of normalcy. I think that we're all a little more sensitive to all the other parts that are involved in it. Appraisers are involved, title companies are involved, and it's been my experience that most everybody is trying to keep and maintain a pretty regular timeline. Obviously, if you're working with agencies, government agencies, and depending on how they're handling the shutdown, is going to impact it too. So I think that most lenders that you're going to find are probably going to be like, err on the side of caution with new contracts. We're going to get them done as fast as we can with as much normalcy as possible and everything that we can control. So I'm not seeing a lot of extensions. I'm not seeing any extensions or anything not making closing dates, especially with purchases.
Great. Now I understand that appraisers are allowed now to use a drive-by or at least a modified type of appraisal. Is that correct? Are you seeing that?
I think a modified would be better terminology for certain. Yes, there's all kinds of different types of appraisals available, and generally you have appraisers go into homes and outside of homes. And depending on exactly what you're having done is going to depend on the allowability of flexibility for the appraiser. But if you've got somebody living in the home and there has already been a Fannie Mae or Freddie Mac loan on the home previously, in an effort to err on the side of caution, those agencies have allowed us to open up that window and only have our appraisers go from the outside. Now, if they see something obvious that needs to be fixed, it's still going to be required to be fixed, or if they're aware of any damage in the interior of the home. But I think that from all levels, there's precautionary measures taken for the people inside the home, as well as for the people in our industry too. So that has opened the doors to some flexibility during this trying time.
Good, good. Well, just like with us when we're showing homes, I see a lot more clients that are going into the vacant homes a little bit more readily than into an occupied home. And even in all cases, wearing masks, gloves, carrying disinfectant wipes, being very careful, and shortening their time maybe, you know, not lingering quite as long, but getting in and seeing what they need to see and then moving on. What's going on with the forbearance? You know, we've heard so many homeowners and all the conversations about forbearance. And of course, we know that's not forgiven. We know it means that there will be a time where you will have to pay that back. Is that going to impact homeowners if they go to make a change in the future?
I am so happy that you've asked this question, because it's a big topic, because there were really good intentions that were put in place during this time. Really good intentions when the government came on and said, hey, you're not going to have to pay your mortgage for 6 months, and you can do it unattested. You can just say, I don't want to pay it. Well, what there was a lack of was there was really a lack of understanding of how the mortgage industry works in its entirety. And what happened in the short version of the story would be, you've got a loan, then you pay your mortgage, and then that mortgage is paid to city and county taxes, homeowners insurance, Fannie Mae and Freddie Mac. It still has to be paid. Well, on the onset of, hey, you don't have to pay your mortgage first maybe 6 months and maybe additional 6 months after that, they forgot that little window of, but these people here, they still have to pay to the government-backed securities. So GSE. So there was a little hiccup in understanding of maybe really this big consequence of what's happening with that. Now, so the government says, okay, we're not going to let it affect your credit, and it's not going to hurt you to do this during this time. But the reality is it's already hurt the industry a little bit, because now everybody is tightening in on what the regulations are going to be, and that's called overlays. They're not requirements that the banks have necessarily put out or the government agencies have put out, but it is the liability of the bank that what they're willing to take on. So I think that you're going to see that tighten up some as you look. I continue to encourage everybody, as I would before this even happened: save, keep your credit scores high, and keep your debt to income in check. These are just the 3 simple things, no matter what, are going to help you, and this is no different. The difference is there's going to be a lot of people that no longer are allowed to buy right now during this time, until we can get things back to normal. So yes, we're already seeing some things change with that. Not necessarily bad though. But the other thing that might happen on down the line, which we're not certain of because we don't know, is your credit might not reflect that you were in forbearance necessarily, and you might not have any penalties, but the banks are going to know if you went into forbearance, and they may put some type of timeline on it. Here's my recommendation to everyone. Use forbearance if you need to. Do not lose your house. If you need to use it, use it. That is what it is there for. If you do not need to use it, and it is not a last resort, there will probably, people much smarter than me and higher up, be some type of downside to doing it if you don't absolutely have to. And reach out to your lender, talk through some items, because I think that when you get to talk with people in the industry that really understand how the industry works, we're not seeing another market crash like we did in 09 and 08. That had to do with the banks. This is just simply someone saying, hey, you don't have to pay your bill, but forgetting somebody else still has to pay it. Does that make sense?
Yeah, sure. And always, as you said, it's if there's a criteria where it's necessary to do something to save your mortgage, save your home, certainly by all means make use of that. But don't use it as just oh gee, I won't have that house payment now for 6 months, because it will be there on the end. You will be paying interest all along.
The expectation is that something will be there despite the efforts to, as it was marketed, or not marketed, I shouldn't have said that, as the CARE Act stated,
right.
You don't have to attest to it. You don't have to prove any hardship. That was the big thing that made it hard. That means you can stop paying your mortgage. I can stop paying mine. Whereas if it was just simply as, if you can prove a hardship, then it would have changed the dynamics of the impact it's having on the mortgage industry right now.
Sure. What about guidelines for being approved for mortgages? Are they requiring higher credit scores or anything like that at this time?
So some places are. Some places have stopped doing, well, I think Chase just announced last week that they're going to require 700 credit score and 20% down on purchases. Chase is a heavy hitter, and we're seeing them do it. A lot of this has to do with the margins, and a lot of it has to do with all the other fun stuff that the mortgage industry really is made up of outside of just an individual mortgage, right? I think you're going to see it, especially for the short term, because you're really, when you have a mortgage, you're going to take it and you're going to bundle it with other life mortgages, and sometimes intermix them in between there too. But what you want is, you want the pretty package of the best things to sell. They sell at the best value. They're the least amount of risk. They're what people want to buy. So in doing this and having loans that now maybe we're a little bit more of a risk involved with, because we do have unemployment and we do have furloughed, and now we have this little servicing hiccup with the CARE Act talking about forbearance. There's several moving parts in there. So now you're seeing lenders say, you know what, in an effort for us to continue to stay alive, we have to change the rules a little bit, so we're gambling a little bit smarter. I don't think it's happening all the way across the board, but I do think that we're seeing people pull back on jumbo loans for certain because of the liability. We're seeing people pull back on bond loans. That would be all down payment assistance. We're seeing people tighten their credit scores and in the loan to value, meaning how much we're going to put down. They're going to require a little bit more. So we are seeing those things now. I don't want that to discourage anybody ever, because it's actually not bad. As you should always do, you should always start getting these things in line as you go. But now for sellers, there's more serious buyers coming to your house because they've been pre-qualified at a less riskier value. Buyers, you're in a good spot too, because when you go to look at these listings, those sellers know, yeah, it's worth getting them in there and letting look. So I don't want the whole idea of this movement to be doom and gloom, because it really is not. It really is not. It's changing some opportunity, but again, we will continue to readjust that as we have always done since the Great Depression. Right. So it's just changing literally. You might feel like you've not shown your house as much, but then the quality of people coming into your house might be better vetted. So let me just kind of keep that twist on there, and it's still a great market. It's a great market for listing, and it's a great market for buying. And kind of this little tightening and it's only helping that right now.
Right. If they're out there looking, that they're serious buyers. And the same thing with our sellers. If they have their home on the market, I think I had heard someone say the phrase, it's like being on Amazon and people are putting things in their cart. You've got to be out there to be seen to get in the cart. So get your house on the market. Let people know it's there.
Yeah.
We're still seeing, it's a great time. Sumner County is still getting homes under contract and closing. And I know, Jamie, you're a go-getter. If someone wants to buy a home, if they call you, they're going to get the best job, the best service, the best that they could possibly get. Why don't you share with us your email and your phone number for folks if they'd like to get in touch with you at Prosperity Mortgage?
You'll press it. So I will give you out my number is 615-975-8741. And my email is just jamie@prosperityloans.com. But you can search me or Google and I will come up. But yeah, I'd love to talk to anybody, and not necessarily anybody just because they want to know, just maybe because you want to know what's going on and maybe understand it. Because one thing I know, and Fran always agrees with me, is the more that you understand, the more fun everything is, and the less scary it is, and the more you know the facts, as opposed to what you think is kind of being said around, which unfortunately right now, like other times, it just gets twisted and maybe misinterpreted, and maybe semantics are a little bit off. It's still a great time, and mortgage rates are still good, and buying is still good, and selling is still good, and I think that will continue to help keep our economy on target, which is why the mortgage industry is so involved in what's happening at the government level.
Thank you, Jamie. And that is just in tune with what I had said on Friday, on my Friday update, is that the housing market is here and it's ready to rebound when everybody's ready to come out from being social distanced. But the housing market is ready to go and it is still moving. So thank you so much, Jamie. Please give Jamie a call if you have questions, if you're ready to go and apply for a loan to go buy the home of your dreams. Thank you so much, Fran Marcou.
Bye,
Jamie. Thank you.